This is a trend that I'd be paying a lot of attention to. I mean, I had 2 emails in my inbox today that showed me that basically that lenders are still actively taking properties back. So lenders are one of the most active sellers in today's markets, right? So if you are a real estate professional, this is a trend I'd be paying a lot of attention to. I'd be calling all of my mortgage brokers, all of my lawyers, anyone who would see a file that is a delinquent loan, even past sellers who maybe were really high leverage and might need to right size their debt load, right? They want to sell the property, downsize into a smaller one, into a more affordable mortgage payment or whatever it is. I mean, these are the big themes right now because we're in this recession environment. We're seeing tons of job losses. We're seeing the cost of living really impacting people. This is where I think a lot of the transactions are going to come from in the market right now. Loan to income of new mortgages is rising, which would tell me that we're kind of back to that point where people are actually increasing their debt loads. And a lot of this, I showed this in last month's presentation, but the debt to household disposable income in Canada was falling. We were deleveraging, and then it actually started ticking up again. And so this is kind of a point of concern from my perspective. The other very interesting part about this on the median loan to income basis is that the alternative to the stress test that OSFI is considering right now is a loan to income measure, where basically OSFI will actually underwrite the bank's portfolios based on the percentage of mortgages that they have where mortgages are over 4.5x or 450% loan to income. And now we're approaching the point where basically 30% of your first time buyers have loans over 450, almost 25% of your repeat home buyers have loans over 450, and about 15% of your investors have loans over 450. And so we're obviously not back to the highs of the pandemic, but this is a point of concern because as your market gets more and more indebted, the upside, the ability for more buyers to enter the market shrinks because you kind of get to your end, right? Like think about yourself as an individual. You can go get another credit card or an auto loan or a mortgage or whatever, but eventually you hit a limit. And as a society, the cumulative impact of all of those limits is us not being able to take on more debt, which means that we don't have much upside in our housing market unless something else changes. Interest rates come down, prices come down, wages rise.